Tesla is rebuilding the three pillars that will define the company for the next decade: manufacturing independence, software-driven profit, and energy infrastructure control. And these changes, quietly happening behind the scenes, may become the biggest valuation drivers for Tesla investors going into the 2030s. Hi, this is Ken. If you're a Tesla investor in the US, UK, or Canada, what we're talking about today will directly shape Tesla's margins, risk profile, and long-term competitive position. These shifts are not simple updates. They are structural changes that affect how stable Tesla becomes, how fast FSD spreads, how valuable the charging network becomes, and ultimately how the company moves beyond being an automaker. By the end of this video, you'll clearly see why understanding these three moves today gives you a major information advantage as a long-term investor. So let's quickly summarize the three headlines before we dive deeper. 1. Tesla has asked suppliers not to use Chinese-made parts for US-built models. This marks a shift away from a long-standing supply chain model built around China's cost and efficiency. 2. Tesla has updated the FSD referral system. Owners now earn rewards not only when someone buys a car, but also when they perform FSD demo drives. This is the first time Tesla has financially incentivized spreading the FSD experience. 3. The Supercharger network is moving to dynamic live pricing, adjusting charging costs based on congestion and usage. This is already happening in over 550 locations. 3 separate headlines, but one unified story. Let's start with the supply chain. Tesla asking suppliers to avoid Chinese components isn't simply a reaction to politics, it's a fundamental shift in how Tesla thinks about manufacturing risk. For years, China offered the perfect combination of low cost, high quality, and unmatched industrial speed. Shanghai alone has over 400 suppliers feeding the Gigafactory. This ecosystem has been one of Tesla's greatest advantages, but the global environment has changed. With tensions rising between the US and China, political unpredictability is becoming a larger threat than raw manufacturing cost. Tariffs can change overnight. Export restrictions can appear suddenly. A single disrupted component could stop an entire production line. Tesla is not optimizing for cost anymore. Tesla is optimizing for continuity. If a supplier chain breaks, Tesla cannot build cars. And out of all the risks Tesla faces, production stoppage is the one Elon Musk has always viewed as unacceptable. This is why Tesla is making the shift now, even though it comes with short-term pain, increased costs, sourcing challenges, and complexity during the transition. But long-term, removing geopolitical fragility from US production will make Tesla's North American manufacturing far more stable. This is a multi-year move that sets the foundation for scaling robotaxi fleets and future models in a politically uncertain world. Next, the FSD referral update. For years, Tesla's referral program rewarded buyers of cars, not users of FSD. But this time, Tesla is doing something completely different, rewarding owners for demonstrating FSD. That's important. Tesla knows the fastest way to sell FSD is not advertisements, it's experience. The data shows that once people experience FSD in a real environment, their chance of buying increases dramatically. By rewarding owners for FSD demo drives, Tesla is effectively building a decentralized marketing network powered by real users, not traditional ads. This is how Tesla plans to scale FSD adoption without increasing marketing spend. But there's a deeper strategic meaning here. This referral system isn't just about selling software, it's about gathering more real-world driving data. Every new FSD user contributes more miles, more edge cases, more training material for Tesla's neural nets. This accelerates the development of V14 and the future end-to-end system required for autonomous robotaxi. In other words, Tesla is building both demand and data loops at the same time. That's extremely rare in the software world. And this is why Tesla sees FSD as a future profit engine that may surpass vehicle manufacturing margins. Now let's put these changes in context. Tesla is restructuring three pillars simultaneously. 1. Manufacturing independence. 2. Software-driven revenue. 3. Energy infrastructure and charging optimization. These are not random updates. They are interlocking strategic moves that build Tesla's long-term architecture. If Tesla wants to deploy millions of autonomous vehicles in North America, manufacturing cannot be disrupted by geopolitics. If Tesla wants to monetize AI and autonomy, FSD adoption must accelerate far beyond its current rate. And if Tesla wants to support an autonomous fleet, the charging network must become smarter, more efficient, and more profitable. Tesla's long-term strategy is becoming clearer than ever. The company is moving from an automaker to a vertically integrated AI mobility platform. And these three updates are core components of that shift. For investors, the implications are significant. Supply chain diversification reduces existential production risk. This improves Tesla's long-term margin stability. Even if short-term costs rise, the long-term payoff is far greater. FSD referral incentives increase FSD adoption, which is Tesla's highest margin product by a wide margin. Even small increases in FSD adoption can dramatically lift long-term profitability. Dynamic supercharger pricing will optimize utilization, reduce congestion, and eventually allow Tesla to match pricing with grid demand and energy markets. This transforms Tesla Energy from a side business into a scalable infrastructure model. For long-term investors, what we're seeing is Tesla increasing resilience in manufacturing, accelerating software monetization, and preparing for profitable energy operations. Here's an insight that may surprise many viewers. Tesla is likely shifting to dynamic charging prices, not primarily to increase revenue, but to change user behavior. In other words, Tesla is using price elasticity to redistribute demand, reducing congestion without having to build more chargers. Most people assume Tesla wants to expand superchargers endlessly, but the truth is, Tesla wants to optimize the existing network first. If dynamic pricing can shift even 10 to 15% of users to off-peak hours, Tesla could delay billions in new infrastructure spending. This is a classic Tesla move. Solve a huge problem by changing software and pricing, not by expanding hardware. Looking ahead, here's what I expect. 1. US-built Teslas will gain in long-term stability and even brand value. As geopolitical risks rise, locally sourced vehicles become more attractive to policymakers and consumers. 2. FSD adoption will rise faster than expected. Once demo rewards spread socially, YouTube, TikTok, EV forums, FSD becomes viral. The more people try it, the more Tesla improves it, and the closer we get to a practical robotaxi ecosystem. 3. The supercharger network will evolve into an energy intelligence platform. Pricing will eventually reflect real-time energy markets, grid demand, and perhaps even energy storage conditions. This turns superchargers into smart nodes in a distributed energy system. Tesla's future is a three-layer ecosystem: cars, AI, and energy, and all three are being rebuilt right now. For long-term investors, the key is not the headlines, it's the direction. Tesla is reducing geopolitical vulnerability. Tesla is accelerating the shift from hardware to software revenue. Tesla is turning its charging network into a scalable energy business. These three moves show Tesla preparing for a future where autonomy, energy management, and manufacturing independence all converge. The market may not fully price this in yet, but the compounding effects will become more visible in the next 2 to 5 years. If your investment thesis is based on Tesla becoming more than an automaker, today's changes confirm that direction. If this breakdown helps deepen your understanding of Tesla's long-term strategy, I invite you to subscribe to the channel. I cover these developments every day, and staying informed now will help you stay ahead as Tesla moves into its next phase. Thank you for watching, and let's continue exploring the future of Tesla together. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language, so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.